Okay. And can you explain what makes something an asset, a liability, and an expense?
So when I was used to do presentations for SCORE, I always explain an asset is something that you cannot put in your pocket that helps you make money. Okay, assets are also deemed like your bank account, the cash in the bank account, the money that is due to you from customers, as well as the other nouns, people, places, and things. So people would be the clients that owe you money. Places are buildings and things like that, things that have addresses and doors, and other things, cars, trucks, anything like that. And then there's some other not so common but important assets like trademarks and other intellectual property that would be considered assets. And I usually tell people you buy assets so you can make money with them over and over again. Liabilities are basically kind of what they are, but it's basically what you owe to folks that are not related to the company. So creditors, utility companies, one of the biggest liabilities you would have, especially if you have a team like I do, would be payroll. That is a current liability. That's something that's always an ongoing concern. Credit cards, loans. I know in the pandemic we had a lot of the SBA giving EDIL loans. That is a liability, something that needs to be paid back, and most times with interest associated with it. The equity section is showing basically how much skin the owner or the owners of the company put into the game, so to speak, and how the business is leveraged. So you can be leveraged by investments from the owners, you can be leveraged by debt, by borrowing, or raising new funds in the field through like an IP or something. Because I know people got involved in investing and learning more about them in the past year, but that's what IPOs do. It creates more equity that we can turn around and use to buy more assets or acquire more things to help us make more money.
Okay. And is a home an asset or a liability?
Home, in the whole sense of it, is more so an asset. And the reason why I say that is because it can increase exponentially in value depending on how you use it. So from a personal level, someone who's not self-employed, it would be an asset, and part of that is improving their net worth. For a company, it is also considered an asset to the extent that if something happens and we need to sell it, it has a market value as well. But it also carries a liability called a mortgage. So we're always looking at how the liability offsets that market value of said asset to whether or not the asset is in fact indeed quote unquote liquidable, so it can convert to cash if need be.